Trading the news is actually called fundamental analysis, and you can break this down into three separate parts. The first one is central banks, and the reason they're so important is because they control interest rates, and the markets are very sensitive to interest rates. And the second one is economic data. These are things like CPI or NFP. The reason data is so important is because the central banks use this information to make their decisions on interest rates. An example of this would be if CPI keeps coming out too high, typically the central bank will want to raise interest rates. And higher interest rates is bad for gold, higher interest rates is bad for NASDAQ, but it's good for the US dollar. This is where we get our moves when data comes out. And the third one is geopolitical events. These are things like physical wars or trade wars or even like political elections. Now, in the last 18 months, we've had some really good examples of all of this. When Trump was elected, the stock market took off on something called market optimism. And then in March 2025, we had the global trade war when Trump was enacting all of the tariffs. And then even right now with the US-Iran tensions giving us market fear. Now, the markets are going to react to all of these things kind of differently. But the two questions that you want to be able to answer in order to be able to trade fundamentals is, how does whatever you trade get impacted by interest rates? Because that's where these two pieces are going to come in. And then how does whatever you trade get impacted by market fear? Because that's where this is going to come in.